Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Thursday, the 11th of May, and we have our regular Thursday guest, David Kuo, the founder of the Smart Investor out of Singapore. Now, David, as always, great to have you on the show.
Yeah, selamat tengah hari, Brian. Yeah, down
Now,
day
selamat tengah
Thursday.
hari.
Down day Thursday.
Down day Thursday. Let's take a look at how the numbers stack up across the region, and then we'll get your sagely insights. We start with Singapore, where you're at. The Straits Times Index is at three up. It's down 0.41%. Bursa Malaysia is up 0.14%. Shanghai is up. Shanghai is down 0.11%. The ASX All Ordinaries is down 0.09%. The Nikkei is down 0.02%. The Hang Seng is down 0.34%. And we round up the numbers with the Kospi, which is up 0.3%. David, your thoughts on the market performance in the first half of the day?
Uh, Pretty subdued, wouldn't you say? I mean, if you have a look at that, I mean, four markets that are down, two that are up, and even the ones that are up aren't up an awful lot, and the ones that are down aren't down an awful lot either. So I guess everybody's just sitting on their hands, trying to digest, I guess, the inflation numbers that came out from America last night. And again, when you have a look at those inflation numbers, it's much of a muchness. I mean, it's neither one thing nor another.
Yeah, so
Uh,
just for the benefit of our audience, it came in at 4.9%, which is a downtrend from
yeah,
previous months, but still higher than what the Fed would be hoping for.
well, exactly. Yeah. Well, the good thing is that there is a four handle there. You know, it's 4.9 rather than 5.0. So maybe the Federal Reserve can take some credit from the fact that inflation is heading down, but it's not heading down enough. And you are getting a lot of people out there saying, hey, you know, maybe the Federal Reserve will be cutting interest rates sometime this year. But I think as far as the Fed is concerned, 4.9 is still far too high. It is still probably two and a half times more than what it would like. It has set a target of about 2%, so not particularly good. What I would like to mention, though, Brian, is that when we have a look at the other side of the world, over in China, the inflation rate came out today at 0.1%. So what would you prefer? Would you prefer 4.9% in the US or 0.1% in China? Which one actually indicates to you to be the healthier of the two economies? Is it the one where there is inflation and there is some economic activity, or the one where there is no inflation, 0.1%, and probably economic activity is in the doldrums at the moment? So it really is a tough choice for people to make. Would you prefer 0.1% or 4.9%? Personally, I would like an average of the two, right? So if you add the 4.9 and the 0.1 and divide it by 2, you get 2.5. And that really underlines why it is so important for these two economies to get together. Somebody's got to get Joe Biden and Xi Jinping, sit them down together and bang their heads and say, sort this problem out between the two of you. Yeah. The sooner you sort out this problem, the sooner the world can actually get to a better place where we have average inflation and maybe some kind of growth.
Now, speaking of inflation, one of the things that we've not heard about earlier this week, which we heard for the first time in almost 30 years, was that the Bank of Japan was worried about accelerating inflation. So
I know.
that's the
Well,
flip side of the coin.
Well, I mean, for decades it has had no inflation whatsoever. Then it went on this yield curve control, and they pumped lots of money into the Japanese economy, and now they've got inflation. But I tell you what, Brad, it is easier to control inflation than to try and spur inflation when you have a deflationary situation. And
Yes.
Japan is an example of that. How difficult it is to get inflation into a system. When you don't have inflation, there is no incentive for anybody to go and buy anything. And I think that is the problem that China is going to have now, where people are saying, there's no inflation. Why do I need to go out and buy that new refrigerator? Why do I need to buy that new washing machine? Because it's not going to go up in price anyway. So you have this problem. And it is easier in some ways to control inflation than to actually create inflation.
Now, speaking of that, David, uh, investors are very concerned now around the debt ceiling and its implications.
Yeah.
What are your thoughts on this, and how do you see this playing out?
Look, we've seen this story so many times before. Every now and again, you actually sort of turn your attention to America, and they have this problem with the debt ceiling simply because America spends more than it actually collects in taxes. And it tries to finance that difference by selling US treasuries, which people go out and buy, and they expect the US treasuries to pay their coupons on time. And at the end of, say, 1 year, 3 years, 5 years, 10 years, 30 years, you're going to repay that debt. And that is why America is the reserve currency of the world. And that is why we all say that the US 10-year interest rate is what we call the safe rate. Yeah. And that is how everything is done. Now we have the situation where the Republicans are refusing to raise the debt ceiling, in other words, allow the US government to go and borrow more money. And Joe Biden is saying we need to actually sort of raise the debt ceiling because we need to reflate the American economy. We need to spend the money to get the US economy back on an even keel again. What I suspect will happen is that it will come down to the 11th hour, like it always does, and then the debt ceiling will be raised. And so, in the meantime, it gives people like you and me and lots of the other news channels and business channels something to talk about and scare the living daylights out of everybody and say, what would happen if America didn't raise the debt ceiling? It would default on its debts, and those people holding those 3 years, 5 years notes will not have the money redeemed. That is never going to happen, Brian. What I think may happen is that there will be some cuts to the budget because America spends more than it can actually afford to at the moment. And the best place to start, by the way, is the senators' wages. I think, if they stop paying the senators, they will soon go and sort of sort out their problems, because the moment they don't get their 170,000, 180,000 a year in salaries, but it's going to concentrate the minds, and they're going to go, let's raise the debt ceiling because otherwise we're not going to get no pay.
Now, speaking of budget cuts, because we have inflation and inflation is starting to bite, we all have to cut back on spending. And one
Yeah.
of the ways that we cut back on spending is all ancillary stuff that perhaps are nice to have rather than must haves. Our Netflix subscription, our Amazon subscription, our Disney Plus subscription. And this is why Disney Plus just announced its earnings yesterday, and they lost 4 million subscribers.
I know. I mean, the earnings results were fine. I mean, the revenue grew. It was up to expectations. The profits, the earnings per share were okay. I mean, that was up to expectations. The theme parks are doing okay, but what wasn't doing okay was Disney Plus. They lost subscribers, and I think this is really the harsh reality. There were far too many streaming services over in America. It was fine when people had a lot of spare cash. You would go, I'll subscribe to Netflix, I'll subscribe to Disney Plus, I'll subscribe to Amazon Prime. It's fine. Oh, by the way, the kids like Disney more than they like any of the other streaming services. But when you find that the amount of money that you have to spend is restrained in some way, then you will have to make cutbacks. And it looks pretty much as though they are cutting back on Disney at the moment, and they are losing subscribers. But the problem, of course, is Disney is also cutting back because it also has constraints. And so it has fired a whole bunch of workers and it's reducing its headcount. If you do that, how are you going to produce the content? If you don't have the content, what are people going to subscribe to? I mean, surely the whole idea is to make more Mandalorians and stuff so that people
Yeah.
can say, I want to go and subscribe to that channel because I want to watch those kind of movies. If you're not producing them, what are you going to do? It is a really tough situation, for any company to be in. On the one hand, they want to be profitable, and on the other hand, they want to be able to grow their sales. It's not easy to actually do both when credit conditions are as tight as they are. And credit conditions, by the way, are going to get even tighter because that credit crunch is coming. Mark my words. I mean, the Federal Reserve is withdrawing billions from the market, and it's going to be increasingly difficult for any business to go out and try and borrow money in the future.
And that's a subject for a conversation for another day, David, because we've run out of time. David, thank you very much for your insights. Thanks for coming on the show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.